Okay, good morning everyone. Lovely to be with you today. I'm Ross McKinnon, Councillor for Bradfield Ward on West Berkshire Council, and also Executive Member for Finance and Economic Development, which is really the hat that I'm wearing with you today, because I'm with Bruce Davis, who's, hi Bruce, who's the Managing Director of Abundance Investment. And together, West Berkshire Council and Abundance have launched a community municipal investment. Trips off the tongue. A lot of people out there call it the climate bond because, well, it does exactly what it says in the tin. It's a financial product, it's a financial investment that is open to you, the residents of West Berkshire and beyond. It is a bond, so you earn an interest rate on that investment. You get the money paid back and some interest over the course of 5 years. And we call it the climate bond because we're investing the money that it's raised. And by the closing date, which is the latest closing date's mid-October, we're hoping to have raised £1 million to invest in projects to help us achieve our environmental strategy objectives. So things like solar panels, that's been the first big, real high-profile set of projects. We've got 6 locations across the district where we're installing solar panels on the roofs. We've got some of the funds are earmarked for tree planting, for energy efficient lighting. So we've got £1 million worth of financing to allocate to our environmental projects, which of course helps us in our journey towards net zero by 2030, which is a stated aim of the council. We're really excited about it, and I'll hand over to Bruce just very shortly, but if I can just explain why we're so happy with the bond's progress. I mean, to date, the bond launched in mid-July, but we've already raised nearly £650,000. So we're almost 2/3 of the way to our £1 million target. Of course, there's still over a month to go, folks. So there's still time to sign up. In fact, it's not open just to big investors. You can invest as little as £5 in the bond. We launched the bond in July. That's, a lot of people call it a win-win situation, but I go further than that. I say it's win-win-win, right? You've got a triangle of happiness here. What are the wins? Well, of course, clean energy, solar panels, reduces the council CO2 emissions, which is the important part of our environment strategy, but it also saves the council money. It generates cash, saves money on our energy bills. And the third win really is for you, the investing public, because you earn a financial return on the bond. Now, I'm not allowed to say risk-free. Okay, there's no such thing as a risk-free investment, but in the world of financial products, this is, I think, as close as you're going to get. You know, you're investing in a local authority, so you get a nice, stable, low interest rate. But of course, when you look at the equity markets and the stock markets over the last few months, a nice, stable return is actually very attractive. So that's been borne out by the level of interest that we've had in the bond and the 650,000 that we've raised so far. So we're really excited about it, and also very proud. It's West Berkshire is the first local authority in the UK to have launched this. I know that Warrington have just followed up, so it's great to see other councils following in our innovative footsteps, and we're very grateful to Abundance. And I'll hand over to Bruce in just a second, who are our agents. They're the FCA regulated firm who've really taken this from the ground up. So really pleased to be working in partnership with them. I'm happy to take any questions at the end as well, but let me hand over to Bruce from Abundance, who can say a little bit more about it. Bruce.
Thanks, Ross. Yeah, so a quick intro, I think, in terms of Abundance and who we are and why we're working with West Berkshire, and as Ross said, also now with Warrington. So I said we're a crowdfunding firm. We were set up just over 10 years ago with a really sort of clear purpose. Our purpose was to accelerate investment and activity towards net zero and becoming carbon neutral. And we do that initially we did that by investing in companies that were building things like wind farms and solar parks across the UK. And so far we've done, our investors have raised about just short of 110 million into those projects. And about 4 years ago, just across the border, actually from West Berks, we worked a bit with Swindon Council, who were building a lot of solar parks, and they wanted to fund that in partnership with their local residents, and we came up with a way of doing that then, and that was successful. That raised several £1 million for those projects, and then we started to look more widely because we realised that councils are actually on the front line here. They're not just they're investing in the local infrastructure, and really what we saw when we were looking around, really important actors in who actually needs to take action on climate change. But I think there's sort of two challenges there. The first is that actually people don't have a big awareness of all the things that councils do. We might be very aware of things like bins and rubbish collection and street lighting, but less aware of some of the investment that people try, that they make in the local community, in the economy, and so on. So we thought this product would be a great way for people to show support to the council for doing that, but also learn a bit more about what's really needed and what's required. And I think from the council's perspective, we also wanted to make sure that we were providing that borrowing in a way that was cost effective for the council or even save them money. So sort of, as I said, a sort of win-win there, that it should be more efficient for the council, but it's also providing that connection with local residents. So as a local resident now, you're also an investor in your local council. And just in terms of the community municipal investment itself, as Ross said, it is a lower risk investment because it is backed by the council. So the return that you get is from the council. It's not related to the specific projects themselves. So it's designed to sort of sit alongside other types of investments you might make, where this is a sort of for people with a sort of long-term, low-risk kind of financial need, maybe a long-term goal that you have for that money. But on the other side, if you're making an investment, say, for example, with national savings, you don't really know where that money is going to be going. So you get this immediate impact. And we've already seen that. I think now the majority of the solar panels are now installed. We've got 500,000 of that installed, and the next projects are coming online. And so you're getting a really immediate effect on your money. And I think that's very important for people to sort of understand, is that the council have got a clear goal, they're getting on with it, and they want residents to support them both in terms financially, but then also find other ways that they might play a role in doing that. So for us, it's about helping sort of reinvigorate a little bit local democracy, because actually climate change is a problem that affects us all. It's something that we all have to play our role in, and I think we've sort of seen that in a different way with all the stuff that we've had to do around COVID-19 and the impact of the pandemic. Yeah. Climate change is arguably an even bigger problem that we face, but the key thing is that we find ways that we can work together on this, both as individuals and collectively. So it's great that West Berks pioneered this. They're the ones who kind of put themselves out there and said, we're going to do it. We've seen really good feedback more broadly, with perhaps 30 councils are watching what West Berks are doing now very closely.
No pressure.
So you start the revolution, if you like. And I think what we've seen also is that local people are already making those investments, which is great to see, because this is a completely new product. It's not been seen before, and in general, we are cautious about what we do with our money. So we've already seen a number of investors coming in locally, but also nationally. People are looking at West Berks and saying, actually, I want to invest in this. I think this is important. So I think hopefully that will grow over the next sort of 6 weeks while the bond is still open, and we can get to that £1 million target. And then where we go from there, well, I think as Ross said, Warrington are also trying to raise £1 million to develop solar projects in their world, and then also we've got Leeds City Council, who are also considering when they're going to do their bonds. So this has real momentum at the moment, but I think the key thing is we're seeing it's sort of real local action on the ground against what is essentially a global problem. And I think we can have a look at any questions that people have got about this. I can see one that we've got there, which is around the reassurances that we have around ring fencing the money for green purposes. Ross, do you want to take that one? Or?
Yeah, no, that's absolutely fine. Thanks, Bruce. Well, I mean, the money raised by the CMI is specifically earmarked for environmental projects. And as an investor in the CMI, you'll receive regular communications from West Berks about exactly what your money's been invested in. And that's one of the best things about this investment. Unlike, Bruce mentioned it earlier on, you put your money in the premium bonds, national savings products, all fine investments, of course. I've got a couple of premium bonds for my new baby that arrived a couple of months ago. But with the CMI, you can physically see, you can go and see it at the Phoenix Centre in Newbury, or you can go to Building 158 Greenham, that your money directly went to invest in that project. I think that's a really unique selling point of this. So, we make the commitment to you, the investors, that's what the money's going towards, and then we regularly communicate with you and tell you exactly what the money's gone into. which is magic, really. And actually, just building on a couple of things that Bruce said there. We mentioned that the fact that you're investing in the council, and we're a pretty safe bet in terms of an investment. You might have seen, nothing to do with Brewster Abundance, but just elsewhere where you've seen investments in solar schemes, they've been a little bit shaky. Well, one of the great things about investing in the council is that the only way you lose your money on this is if the council goes bust, and that's vanishingly unlikely to happen, I would say. Bruce alluded to the fact that it's lower cost to the council as well, and it's over 0.5% lower cost to the council, which means the council taxpayer saves as well. So when I'm talking about win-win-win, I could actually add another win to that and make it more of a square than a triangle. So yeah, thanks for that, Bruce.
I think there's also a couple of other questions. In terms of that raised target, yes, if we don't raise the £1 million, one of the reasons why we've set the price that we have, so you're earning 1.2% on your money over 5 years, is it pretty much, it's slightly cheaper than, but very close to the cost that the council currently borrows from the UK government, which is something called the Public Works Loan Board. So in a way, if we need to top up that amount, there are other sources of finance. What we're really doing here is trying to begin the process. Interestingly, it's 150 years or so since the first local council bond was issued. This isn't actually a new thing. As often the case in finance, you find in history they did it earlier. It only really died out because it was a paper-based process, and it required, in some cases, sort of 30 people sat in offices writing out certificates by hand. The internet came along, and we were able to sort of reinvent the municipal bond, but also to allow this very low minimum investment, because that wasn't also possible in the past. It was perhaps £100, and bringing it down to £5, we feel makes it more democratic. So yes, if we don't raise enough, then some of those projects will get funded through alternative means. But the key thing is we feel that people have at least bought into and invested in those initial projects.
Yeah, thanks, Bruce. I've seen another question just appear from the West Berks Climate Action Network. Morning, guys. Hope you're well. What other projects might the money go into as well as solar panels? It's a great question. Over half of the money is going to be allocated, already has been allocated to solar panel projects, but the remainder is going to be spread across some other environmental projects, such as tree planting, new cycleways in the district, and also energy efficient lighting. More on that, more information of that to come as those decisions are made, but that just gives you a flavour of the type of things that the finance is going to be invested in.
And as Ross said, as an investor, you're going to get these regular updates, because every 6 months you're getting a payment from the council, and each one of those payments, and it's something we've done. As I said, we've been doing this type of investment for the last 10 years, not with councils, but with companies. Every 6 months, our investors all get an update, and we make it a sort of point of principle, really, that investors will always hear first news that relates to their investment. So you get that through email or through our website, where there are various updates, whether that's pictures and video from the sites themselves, but also updates in terms of the energy production and things like that. Because I think it's really important that you don't just get this financial return, you also understand exactly the impact that your money is making. But I think underlying that is that doing this, making this stand as West Berks are, is about showing that you can accelerate change. West Berks is targeting a date that's 20 years faster than the UK government as a whole. And what's interesting is that that's starting to become a little bit competitive between different councils. 2030 is quite a common date. Some people are trying to aim earlier. And I think that we do actually need to make these changes faster than 2050, and it will have to happen at a local level.
Yeah, I would echo that, Bruce. And actually, one of the great things from my point of view as finance portfolio holder in the council, often when I'm standing up in the council chamber delivering budgetary information and finance information, it's not always universally accepted by the opposition that we're doing the right thing. Well, with this, we've actually had excellent cross-party support. The Liberal Democrat opposition and the Green Party councillors as well, they all were really supportive of this. So it's quite nice to be able to really deliver a good news and a well thought of initiative that's received plaudits and encouragement and support from across the political spectrum.
I can just pick up on that. There's a specific question that we've had now on about the investment itself and the return. Actually, the easiest way for me to answer that is to suggest that you go to the project page on the website, which is abundanceinvestment.com. What we have there is a calculator. So it allows you to put in the amount that you would like to invest. And the calculator shows you two things. It shows you your return, which is 1.2%. But because you're also getting a small amount of capital back in each of the original investment back in each payment as well, it shows you the amount of interest that you're earning and the amount of capital you're getting back in each payment over the 5 years of the bond. So you're getting 10 payments in total, and they're relatively equal amounts of capital coming back and interest as well. So yeah, if the best way to see that is to use that calculator, and it gives you a real idea of if you're investing a small amount or a larger amount. It will let you put in that number.
Yeah, thanks, Bruce. The way I explained it to my daughter, who was interested, she's 13. I said, well, with a repayment loan or a different type of loan, you would invest £1,000, you receive the interest every year, every 6 months, and then you get the whole amount paid back at the end. That's not like this. The annuity bond is that you get a bit of interest paid back, you get a bit of your capital paid back as well. So is it absolutely equal amounts, Bruce? I think it is, isn't it, over the 10 years, or very close to it?
Much, yeah. It's the interest is paid on the amount you've got outstanding, so that changes a little bit. But yes, pretty much equal amounts over the term. There's a slight variation in one of them, but I think pretty much equal amounts on the way back.
Nice. Do you want to deal with question 5, Bruce? That's
so guaranteed.
You have to be careful with the wording there.
No, the way you should look at an investment is in terms of risk on your capital, absolutely. And when you sign up to be an investor, we do two things. We will show you those risks, and we also provide an offer document which does two things. It details exactly what the money's being spent on, but also the risks of that investment. And I think the risks of backing a council are that the council, for whatever reason, gets into financial difficulty and cannot repay. But what a council can't do is to go bankrupt. It can't say, I'm not going to repay my debts. And it's required if a council gets into difficulties is that it has to do changes to its spending budgets, but it has to honour its debts. So as Ross said, this is there are different types of risk out there. There are government risk, there's local government risk, and then there's company risk. And local government risk is only slightly more risky than a government risk because of the different options that a council has in terms of raising taxes. It's slightly more limited than the number of options that perhaps that Rishi Sunak is considering at the moment. So so yes, it's not guaranteed, but it's a very low risk investment relative to other things. And yes, in terms of that 1.2%, that is fixed. So we're saying you're going to get that stable return on the capital outstanding. But one of the reasons we're returning capital to people over the life of the investment is that, yes, that does give you the opportunity to reinvest that money, maybe into other CMIs that are available, and so you can get a return on that money. It's not locked away for the 5 years.
Yeah, thanks, Bruce. I actually teach investment management qualifications as part of my day job when I'm not at the council. And what I say to my delegates all the time is there's no such thing as a risk-free investment. Bruce's explanation there about the government, local government, and corporate risk was a very good one. Even if you put all your money under a mattress, that's not risk-free either. You could get burgled or something like that. So yeah, local government risk, it's very, very close to risk-free, although of course we're not allowed to say risk-free. Question 6, Bruce, I don't know if you dealt with that one as well, the 1.2%, that is a fixed percentage rate over the 5 years. So yeah, so just the way we decided to structure the bond. And I think question 7 is definitely for me, Bruce, unless you want to step in and rescue me.
Well,
I think West Berkshire Council under a fair amount of debt already. I think if you look at one half of the balance sheet only, then yes, it is. So you say, yeah, okay, the overall borrowings are about 230 million. But of course, those borrowings have been made to invest in assets, to invest in the capital programme. For instance, we borrowed 63 million pounds, but then we invested that in commercial property. And so we've got 63 million pounds of assets backing up that debt and earning a return. I gave a presentation to the council's executive on Thursday night about the budget, the Q1 budget position, and the debt servicing costs. It's about 8% of the overall revenue budget compared to other local authorities. That's completely manageable and very low. So no, I wouldn't be worrying too much at the moment about the level of borrowings that West Berks has. But thanks for the question.
I think it's also good to say that, from our perspective, when we were putting together this product and considering the risk for investors, we decided that lending on the same terms that the UK government has decided to lend to councils was a good start point. So, councils have the prudential borrowing requirements and audits and so on. So we're working within those same frameworks that the UK government deems are appropriate for investing into councils. And so we thought that investing on equal terms to UK government, that made a lot of sense.
Yeah, absolutely right.
And I think that, yes, so just in terms of those other investment schemes, there's a question there about, yes, you can invest directly into projects. And I think, this is what I was saying really, that on Abundance, if you look at the different things that we have available over time, you can make more money from an investment into a project or a company, but that will carry greater risk. And whether it's a community energy scheme or a corporate scheme, so the biggest companies we've backed have been sort of multi-million-pound tidal companies. They might pay 8% because there's still a risk that things don't go well for them, and all the way down to established wind and solar parks where you may be getting 4 to 5% on your money. But you fundamentally are taking a risk that project needs to earn that return to repay your capital. Whereas in the case of CMI, we've disconnected that project risk and said, okay, this is backed by the council. So it's for people and for particular pots of money that you might have, as Ross was saying, particularly people put money aside for children. You don't want to put a risk on that money. Very common that people use premium bonds and national savings for that type of product. So this is an alternative to that, but with the added benefit that that the investment itself is contributing to that better world that actually you're saving up for, because we're talking about relatively long-term investments. 5 years is a relatively long time. So yeah, that's the combination there. So we're hoping that people see CMIs as something that goes alongside things that they might do if your appetite for risk is a little bit higher and you're prepared to back an individual project as opposed to a council.
Yeah, couldn't have put it better myself. The level of risk, the level of return associated with any financial product is commensurate with the level of risk taken. And really all of those different investments that are out there depends on your attitude to risk about which one you want. And in fact, it depends on the other range of investments that you have. If you're self-investing your pension fund, for instance, you're going to have some shares, you have some equities. They are riskier than bonds. Actually, diversification and having a bit of a mixture about high risk and low risk investments is what any investment manager would recommend to you. Absolutely agree with that.
Community energy schemes sort of welcoming this because it's something that sort of sits alongside. And my own pension is invested with Abundance. We have a pension product and it's 100% green because all of my money is now backing Abundance projects. So the risk on those.
Your money where your mouth is, Bruce. That's it. Huh? You've put your money where your mouth is. That's
absolutely good. Yeah, and some of those are riskier than others, and so yeah, I've had to think quite carefully about, and as I get older and my children are sort of going through university now, then it's sort of also you start to reduce the risk that you want to take on that pension. So this is actually a product that sort of adds another wing to what people can do. And yeah, in terms of the interest itself, so it qualifies for the personal savings allowance. So the amount of money that you get paid, if you're a lower rate taxpayer, you get an amount of that, £1,000 of that is tax-free. It isn't yet. We're hoping that in the future CMIs will be eligible for an ISA, but other investments on Abundance are, but these ones specifically not yet, but we're working on that. So yes, you will, if you earn more on your savings across other places than £1,000, then you will pay that tax. So that's something that we're working on.
Yeah, absolutely. I know that not just West Berkshire Council, but other councils, I've spoken to the local MPs. It just requires a little bit of a tweak to the regulations, I think, at parliamentary level to allow these to qualify for ISAs and tax efficient wrappers. So hopefully subsequent issues will have that tax-free benefit. So we'll cross our fingers.
Yeah, exactly. I think we had to sort of establish this idea first before we could start to campaign more actively to be included into ISA, but we hope that it will. But I think the key thing is that it is treated as an interest payment as you would have on a savings account, and therefore does qualify for personal savings allowance.
Yeah, good point, Bruce. I think we've reached the end of the questions list. I guess I'll sort of sign off my element really, Bruce, by saying thanks again to you guys and Abundance for being such great partners in this. Fingers crossed we'll get to the million by mid-October. Guys, those of you who are listening to this stream, there's links on West Berkshire website and Abundance's website if you want to put in as little as £5 to do that. And we'll certainly be considering further issues along these lines if the bond's successful, which I'm sure it will be.
Fantastic. Thanks, Ross. And I think, from our side, West Berks taking the lead on this is really about creating a whole new way that people can invest in green projects. So it's really great to see that we've come so far so quickly actually on this bond. And yes, we're aiming for that million, aiming for that by mid-October. And look forward, hopefully, to getting many more local investors involved as that develops. Thank you.
Thanks, everyone.